This has to be top 5 craziest days ever in crypto. We have 2 billionaires, crypto billionaires, running the biggest exchanges. They get into Twitter beef. It turns into much more than that. And now we have an exchange that exploded. We have markets crashing, potential insolvency. I messaged you yesterday saying we need to talk about this. I did not think we would be where we are right now.
Yeah, the last 24 hours has been historic in a bad way, to put it lightly. So yeah, everything's developing so quickly now. Everyone in the industry is sort of asking the question of like, how did this happen?
Who knows how deep this goes and how bad this gets? We can talk about some of those new developments. So I'm excited to dive into that. And you wrote the most comprehensive, it was a great thread covering the beef between CZ, CEO of Binance, and Sam Bankman-Fried, CEO of FTX. Let's set the stage here. I know most people probably already know the details, the big level, but still, how did we get here? This beef, it just ballooned up, and now we have an exchange that imploded. But this started a couple of years back. When did CZ and Sam start beefing, and why did it get to where it is today?
You know, I think one of the things that really stood out to people in the thread was just how long this has been developing. So, you know, to kind of take people through the process, back in 2017, that was when CZ founded Binance, and it quickly grew to the largest exchange in the world for crypto. And basically around that time, Sam Bankman-Fried had actually started his own trading firm called Alameda Research that was doing basically quantitative crypto trading. Fast forward to 2019, SBF actually came out and launched FTX, which was his centralized exchange. And I think a lot of people underestimate just how smart and strategic CZ is. You don't get to the number one spot by mistake. And he was actually one of the first people to invest in FTX. So, early on, he sees this up and rising company. He invests in them. Fast forward a couple of years to 2021, suddenly he looks over and this little upstart, exchange is suddenly on its way to being the number 2 by volume, just behind Binance. So at this point, it's gone from being like, hey, this is a, nice little competitor that we want to support, to, wow, this is someone that we're going to have to compete for volume in the future. And I think that's when things started to change. So in July of 2021, last year, Binance actually divested from their FTX position. So they raised another $900 million at FTX, and Binance used it as their chance to get out. As part of that, they got about $2.1 billion in FTT, which is FTX's exchange token, and BUSD, which is a stable token. And over like the past few years, like there had been I think they'd kind of been going and doing their own thing. And then recently things really started to pick up again in terms of a rift between the two parties. So it sort of started with the regulation stuff. SBF is heavily involved with crypto regulation. And as part of that, there's some belief that he might have been pushing for regulation that would hinder Binance. He even put out like a tweet, which is now being shared a lot, which is he basically said, I hope CZ is helpful with DC, but then he went, can he even come here? So like really just taking a jab at him. And I think CZ really took that poorly. And I think, there were 2 events that really gave CZ an opening here to make a play. The first was that Sam Bankman-Fried about 2 weeks ago published a blog post where he said, this is what I would propose for crypto regulation. And it was met with severe backlash in the industry. A lot of the proposals would have effectively rendered DeFi ineffective. So basically, number one, CZ astutely recognized that the winds had kind of shifted in the industry and a lot of people were turning on SBF. But then the second thing was that CoinDesk, a crypto media outlet, published this document, which basically showed Alameda's balance sheet. And the most concerning part was that Alameda had a couple $2 billion worth of the FTT token on that balance sheet, which is really concerning because, one, it inextricably links Alameda with FTX. Number 2, it's an Achilles heel. Like if that token value were to tank, then it would actually tank both the value of FTX, and Alameda might not be able to fulfill its debts. And so I think CZ, coming off the heels of having some tension with SBF, he really went for the kill shot, and he publicly tweeted, hey, we have, 2.1 billion of FTT and other assets. We're going to liquidate it all. This feels like another, Terra Luna situation. We're going to learn from our mistakes. And that really set off the string of events that's led us to where we are now.
Yeah. And that FTT you just mentioned. So when CZ divested from FTX, right? Took their investment. They have this giant now pool, this giant holding of FTT, which is the FTX exchange token, 2.1 billion. This CoinDesk article, I think, is just what set the world on fire. It released the balance sheet of Alameda, which is Sam's trading desk he's no longer a part of. But, I mean, that's the one he built. That's what led to FTX. Like, I had Sam on the show 3 years ago, maybe a little bit over 3 years ago, and he was just about to launch FTX. Like, Alameda was his baby. That's how they made all their money, right? Yeah. And there was always this debate, this kind of skepticism on whether or not those two were actually separate, right? That's why a lot of traders at the very beginning, I remember the consensus back then was, why are we going to trade on this exchange? It's their venue. You're directly trading against a hedge. Like, this would not fly anywhere else but crypto. Over time, as FTX got bigger, I think people kind of said, well, it's a decent exchange. It's liquid. They do a lot of volume. They have the coins I want. I'll kind of just look the other way and hope that they're doing the right thing. But when this CoinDesk article got published and people saw how much of Alameda's balance sheet, their trading desk, was just, it was almost half, I think. I'm looking at the numbers right now. Their balance sheet was, so they had $3.6 billion of FTT and then another $2 billion of FTT collateral. And their total balance sheet, when this was published a week or two ago, was $14 billion. So 5 or 6 of their $14 billion was this one exchange token. And they're obviously the biggest holder there. And then, as you said, it begs the question, when CZ says he wants to liquidate, who's the buyer? Like, they own it all, right? So CZ sparks this. What happens next? Because CZ kind of tips that first domino, and it's that meme. You hit the first domino. That's not going to be the end of it.
Yeah, it's a great question. And I'll caveat what I'm about to say, too, in that there's a really important, key question behind this all, at least from my perspective. And the question is, was, Alameda and FTX's downfall, inevitable? Meaning, did CZ see something that other people didn't know about where he knew he had to get out? Or was it that he recognized the weakness and him getting out was what caused the downfall? I think that's a really important question that no one for sure knows.
And what I think is interesting, I don't want to interrupt you here, but I just saw a new thread. We'll cover it later in the show. I just saw a new thread, and people think that CZ did know something was up, but they dug in, and apparently it looks like FTX already bailed out Alameda when Theros Capital and Luna collapsed. It looks like Alameda also took a hit, and FTX bailed them out back then. Now, who knows if CZ was aware of that? If there's anyone in the world that would be aware of it, it's probably one of the biggest crypto whales in the world. But that kind of, let's just set the stage with that. So go on.
Yeah, it's a great, and I know the thread you're talking about, and it does raise a lot of questions because pretty much everyone was getting wiped out, except for at the time FTX. So it's what did they have differently? Well, they had Alameda, but kind of just bring it back. So how did this develop? Well, I think when I started to realize it was pretty serious were a few key events. So obviously CZ comes out and says this publicly. And I think coming off the heels of the CoinDesk article, this obviously perked up immediately a lot of people's ears. And I think, if CZ did want to actually go on the attack here, and if this was intentional, it was strategically brilliant because I think, number one, he understood that by having about, I think it was 500 million of FTT, that was a sixth of the market cap at the time. So not only could he actually on a fundamental level do it, but the second is I think CZ is extremely clued in to the social sentiment on crypto Twitter and the crypto community. I think when you look at the past year where you had, centralized exchange after centralized exchange going down, I think he realized that you can most definitely prey on that type of fear. And so, I saw this really good tweet by the head of research at The Block. He basically said, look, even if there's a 1% chance, right, of FTX going up, it's a prudent decision to pull your funds out. So what then happened, I think, was two things, right? The first was you saw an immediate reaction from the FTX team. So Caroline, who's the CEO of FTX, she basically came out and was like, hey, can we buy this OTC at $22? You saw SBF calling for let's make love in blockchain, not war. So that immediately kind of set off some red flags to me. I was like, oh, they're really seeking an olive branch here, which is kind of against the nature of FTX. FTX has been pretty aggressive, I think, at times in the past. And so it just seems a little off brand. But then I think the second thing is the narrative started to pick up. So what you saw was that, at least to me, what clued that this might be a bigger issue was that I noticed the FTT price. Someone was trying to defend that $22 threshold, which is, obviously lines up with what Caroline had suggested. But then in parallel, you saw other tokens like Solana in specific dumping a lot harder. And so, I don't think it takes a big leap of, assumptions here to say, okay, clearly they were probably selling their sole position to defend that FTT. And I feel like at that point, the jig was kind of up, because it's like, okay, it's obvious that FTT dollar value does matter to them, right? Which meant that if it went down, people were going to assume that FTX and Alameda were going to go down with it. And so I think it became almost a self-fulfilling prophecy at this point, where once that threshold got broke, it was going to be bad news.
And Alex, you know what I was thinking, and I saw other people post it on the timeline as well. This was yesterday or 2 days ago. Everyone started wondering kind of out loud. They were tweeting it and saying, why is $22 so important? Like, why did she specifically tweet out after CZ says he wants to sell, which is reasonable. Who knows? Maybe he was opportunistic. Maybe he wanted FTX to fail. Maybe he just was worried. Right after that, when she tweets out and says, we're willing to buy all of it today at $22, it became one of those, are they confident? It came across as much more of, it can't go below 22, right? That's when the panic and the fear really started to set in, and people were wondering, like, what happens if it does go below 22? And then you see ridiculous theories, which turned out to be true. But I think that really got people going.
Yeah, most definitely. And I think, if I had to venture to guess why FTX threw it out there, I think they were actually in a bit of a desperate position. I think maybe there was like a last, chance Hail Mary of like, hey, this is a price that might be compelling enough to CZ and Binance to take, and it would, not put them in the bad position. But I think what they probably underestimated, or at least what I've inferred from the way that CZ has been behaving since that, is I think CZ was kind of out for blood here, right? So I don't think CZ cared, to make that OTC trade. I think he sensed there was a bigger opportunity at play here. And that's like precisely what happened. And I think you also called out another good point, which is, it's very dangerous, especially in crypto and the financial markets, if you give people a target. Like, if you give people a target to go after or to position against, suddenly it'll find a way to get there. Because that's just the way that, financial incentives and trading works. So I agree. That was definitely, I think, kind of marked a target for them. And the moment that threshold was broken, it raised a lot of questions as well.
Yep. So then 48 hours ago, CZ kind of taking this all in as everyone's starting to panic. The withdrawals are starting. You still have some people saying, guys, like, let's not get ahead of ourselves. FTX cannot go under. Alameda has been one of the biggest market makers. FTX has been one of the biggest exchanges. Just because their token drops doesn't mean they go under. CZ pushes a little bit further, and he says, liquidating our FTT is just post-exit risk management. We've learned from Luna. And once he said that sentence, I've learned from Luna, it put into everyone's mind, can this thing death spiral? Like, is this... Why is he wording things like this? If he wanted to sell and get the best price, he wouldn't be tweeting out and saying we're liquidating all of our FTT. He wouldn't be tweeting out and saying this could end out like Luna, like we learned our lesson from Luna. He said we gave support before, but we won't pretend to make love after divorce. We're not against anyone. We just won't support people who lobby against other industry players behind their backs. Another little jab. He's kind of letting them know why he's doing it. And while this is happening, this is when the stable started to, this is pure panic now. This is about a day ago. And you actually sent me a dashboard. We were messaging last night, and you said, look at this bank run. That's when the bank run started on FTX.
Yeah. I mean, I think you're right in the sense that, CZ was very deliberate in his wording and his delivery. A lot of it, like almost every message or tweet he put out seemed like it was delivered to basically deliver maximum impact in a negative way. To FTX, whether it was, coming out and basically stating that they were going to liquidate it all, whether it was, there was a whale watcher alert where it was like 500 million of FTT moving, and he quote tweets it and he goes, yep, this is part of it, and then even just like in other things, like even, which we'll get to probably of like, his offer of looking into acquiring FTX.com, I mean, he was very careful with his wording there. He said this is like a non-binding letter of intent. We need to do due diligence. And so, yeah, I mean, I think, look, CZ gave a masterclass in it. There's a reason he's basically been the king for so long. Like, and to put it into context, a lot of people lose sight of like just how big Binance is. Binance does about 10x the volume of FTX. So like, if you look at the past 24 hours, it might be slightly skewed with this whole ordeal going down, but like the last time I looked before the situation took off, FTX was doing about 2.3 billion in total volume, and Binance was doing around 20 billion in volume. Not to mention that CZ also helped launch the third largest layer one blockchain in the BNB chain.
Yep.
So he's a very powerful player in this space. And I think Sam just learned firsthand what happens when you go up like head to head with people like this. Oftentimes one person walks away, unfortunately.
Yeah, so I go to bed last night. Everyone goes to bed last night, kind of waking up and assuming we're gonna see more of a Twitter beef, more of this just continue to evolve. What's going to happen to the FTT price? I woke up to something entirely different. It was an announcement from both of them, and I'm going to read the announcement out loud for people that didn't see it. Maybe you did, but for people listening, I think this will help understand how this really got wild today. Sam tweets out at the exact same time as CZ. He goes, "Hey all, I have a few announcements to make. Things have come full circle, and FTX.com's first and last investors are the same. We've come to an agreement on a strategic transaction with Binance to buy FTX. Our teams are working on clearing out the withdrawal backlog. They will clear out liquidity crunches. All assets will be covered one-to-one. This is the main reason we've asked Binance to come in. It might take a little bit to settle, and we apologize for that." As Sam tweets that out, we're getting bought. FTX is done. Like, that was shocking to see, especially because I've been, as you scroll Twitter, you see impersonators, people making jokes all the time about FTX going under. That was really him. So then you go to CZ's page, and he said, "This afternoon, FTX asked us for our help. This is a significant liquidity crunch. To protect users, we signed a non-binding letter of intent intending to fully acquire FTX and help cover liquidity crunch. We'll be conducting a full due diligence in the coming days." And he said there's going to be a lot to cover. It's going to take some time. It's a highly dynamic situation. We're assessing the situation. Expect basically craziness, expect volatility, but it is now set in stone. FTX is done, and this sends shock. Like, no one expected this, dude. When I messaged you to set up the call, it was, all right, let's figure out the risks here. Yeah. Is FTX in trouble if the price goes down? No one expected the second largest crypto exchange to go under. It happened in 48 hours.
Yeah, it was quite crazy. And I think there's some important nuances to this as well that I basically just uncovered from doing like hours of Twitter spaces in the past 24 hours. But, it's important to like basically break out like FTX, the exchange actually has two parts. So there's FTX.com, which refers to its international market. And then there's FTX US. And so what's interesting is that if you look at the offer, it wasn't actually for FTX US and FTX.com. It was actually for just FTX.com. So the question is, okay, why would SBF start by trying to sell the international market? And I think from his point of view, it's like, okay, we have this huge hole in our balance sheet right now, and we need to fill it. So I think his intention was, okay, if we sell off the international business, fine, we give that up, we lose to Binance. Hopefully we can raise some capital from that and use that to plug the holes, right? And try to at least, put together safety package for FTX US. And that was, I think, initially what happened, which is why people were initially like, oh, maybe this isn't like as bad as we think it is.
Right.
But I think where it really started to get concerning was after FTT started to tank, because FTT actually didn't tank off the initial news. Like at first it was actually starting to recover, and then all of a sudden it was like, bam, 80% drop. And I think what became more and more clear to people was, wow, like they actually have a liquidity crisis, and I don't think they're going to be able to plug this hole in the balance sheet. And so, where that brings us today is there's a very good chance that, Binance will not buy, FTX.com still, especially if the liabilities are that high. They're better off just letting them go into bankruptcy and buying it for pennies off the dollar, which is extremely concerning, obviously, for any FTX.com customers, because as we've seen with Celsius, as we've seen with Voyager, customers never get their full amount back that they had deposited with them. So that's concerning. I think where all eyes are now are on FTX US and Alameda. And at this point, there's a lot of really concerning like tweets and information coming out that's suggesting that they might be going under as well.
So this morning, when those tweets go out, the hive mind kind of starts to price in, okay, Binance is going to come in and save the day. They're going to buy FTX. Everything's going to go back to normal. Wow, this was unexpected, but Binance is saving the day. So prices, as you said, jumped up a little bit. Bitcoin, ETH, everything jumped up, FTT. And then like an hour later, when people reread those tweets and information starts coming out and people start doing the numbers, they say, hold on. And Sam's wording, he said, this will clear out liquidity crunches. All assets will be covered one-to-one. This is the main reason we've asked Binance to come in. And
He's also deleted those tweets, by the way.
Well, I didn't catch that the first time I read it, but the second time I read through, I started thinking assets will be covered one-to-one. So they're not covered one-to-one. This is the craziest part of this entire thing. If an exchange token, like let's say Binance coin drops, or if Coinbase had a token and it drops, that token, the utility of a lot of these exchange tokens, just give you discounted fees, right? So traders that trade a lot on that exchange, they buy it. Maybe some people buy it as a quasi-equity play. They think Binance is getting bigger, so they buy Binance coin. But you don't have a claim to their cash flows, right? It gives you discounted fees and maybe some token burn mechanics they have worked in. When Sam tweets out that all assets will be covered one-to-one, it really starts to throw some big questions as to why does a token that grants me discounts on my trading fees, when that goes down, why would the assets that I deposited not be covered? And this is like where the giant risk lies, right? Like, why are all of a sudden client funds at risk? And that's the big question right now in crypto. How could the second largest exchange, were they lending out client funds? Were they running a fractional reserve? What the hell is going on, dude?
So Brian Armstrong, the Coinbase CEO, just came out with a thread actually, and he basically all but confirms that FTX. First, he says, Coinbase had no material exposure to FTX or FTT or Alameda. And then he goes on to say, I think it's important to reinforce what differentiates Coinbase in a moment like this. This event appears to be the result of risky business practices, including conflicts of interest between deeply intertwined entities and misuse of customer funds, in parentheses, lending user assets. So, I think that tweet sort of confirms the worst fear people had, which is two things. One, that Alameda and FTX themselves were deeply connected, which is obviously problematic for a variety of reasons, right? Because you're passing information between the entities, most likely that they shouldn't. You're also now creating dependencies on them, right? Where if you're going to hold that much of the native exchange's token on your balance sheet, if the exchange goes down, you now have put all of that basically assets on the balance sheet at risk as well. But then I think the more concerning thing is, this statement around misuse of customer funds, lending user assets. That is extremely concerning. And the one thing I'll say about this is, I think when these things happen, a lot of people, they question, like, how does this happen? Like the same thing in 2008 when, a lot of these big, financial institutions went down and investment banks and hedge funds. It was like, how, are companies this big being this irresponsible? But I think people forget that you cannot have, big upside without big risk. And part of the reason FTX grew as quickly as it did was because they were trading very aggressively and very risky over years. And for a long time, it played off. But we've seen this time and time again, whether it's with Three Arrows Capital or other groups, is that all it takes is one or two really bad trades when you're at that size to really send things into a really bad death spin. And that's what I believe happened here. I think, there were a couple of things that happened previously, and it basically put the margin for error shorter and shorter for FTX. And then they reached the breaking point and the dams broke, unfortunately.
Yeah, and we're right about to get into what now could potentially happen next, right? What are the biggest questions we need to answer? How far could prices drop? Because we've seen fallouts like this in the past. Three Arrows Capital blow up, Luna collapse. The one benefit we have here in the bear market is we've now lived through this for the past 6 months. We know what happens when an event like this happens. But for people that are still trying to wrap their heads around FTT, which is FTX exchange token, how it relates to Alameda, who's lending to who, there's a really great thread that came out from John Wu, and he described it perfectly. He said, FTX, the exchange, creates FTT, which is their exchange token, right? So the exchange creates a token. Their trading desk, Alameda, buys the FTT, or it's given to them. Alameda, the trading desk, then posts that FTT. They give it back to the exchange, which there shouldn't be a relationship with, and now they can borrow funds. I think we'll get more details pretty soon on whether or not those are client funds. So if I had funds at FTX, were they giving it right to their trading desk just because they had this exchange token? Who knows? But they created this flywheel of, as you said, when prices are going up, this is great. They have basically unlimited capital. They can continue to borrow. They have this exchange token. They post it. They can borrow stables, Bitcoin, ETH, and do whatever they want with it. All these trading strategies. But when prices start going down, and all of a sudden the exchange has lent out their token and now they're holding it as debt, it's like eventually they're going to need that ETH and Bitcoin and dollars back, and it's not there anymore because the collateral is basically worthless, right? So there's 2 or 3 giant risks. The first one is, why are client funds at risk? Like, that's something when you deposit to a crypto exchange, you hope to God that they're not trading it. And with FTX, it wasn't FTX trading it, but it's kind of the same company Alameda was trading it. The second thing here is if CZ backs out of this deal, because I'm seeing rumors that they're $6 billion short or $5 billion what they were trying to raise today, what the hell happens to all the clients there? Like, do you get 50 cents back on the dollar of what you had deposited? Does this lead to ridiculous regulations? Have you seen anything? Like, what do you think the chances are this deal goes through? You think it's low chance that Binance buys FTX, or is it a higher chance? Early in the day, people were excited. They said Binance is buying FTX. I think as more details come out, it's like, why would Binance buy this? It's just a dumpster.
Yeah, it's really tricky. I mean, I think, just thinking from first principles here, in order to predict what's going to happen, there's kind of 2 main buckets you have to look at. You have to understand, what are the assets collectively that FTX and Alameda has, and what are their liabilities, right? Well, what do we know right now? We know that from an asset perspective, they have a huge hole from FTT. We know they held a bunch of FTT on their balance sheet, regardless if it was, 10% or 50%. We know there was a significant portion that they lost on their balance sheet because it effectively went down a bunch. And we also know that as a result of everything that's happening, a lot of other projects are also seeing their asset prices drop. So Solana's down bad. They have a ton of different other holdings they have. So on the assets front, we know it's not looking good. What gets more concerning is when you try to look into what are their liabilities, right? Who've they taken out loans from? What are the actual details of those loans? When are they due? What's the interest payments on them if they don't meet them? Who could possibly be affected by the contagion? Because this was what happened with Three Arrows Capital, right? They were basically posting this vaporware collateral, right? They basically had either tokens that had lost a ton of value that were posted as collateral, or they were reposting the collateral in a bunch of places. So I think, the worst case scenario here is that basically they got in way too deep, right? They're not able to actually fulfill, right, their debt payments. That then causes contagion to other, financial companies and other crypto projects. And then as a result of that, they effectively go under. And when they go under, then client funds are absolutely at risk. And, to get to the question of, would CZ do this? I mean, it depends, right? The value of FTX.com would basically be the customer base. It could, maybe be a way for him to further cement, his hold over the international industry.
Right.
That was the upside, but the potential downside could be that the, outstanding balance just keeps growing, and he just reaches a point where he's like, you know what, I don't want to touch this dumpster fire, right? I'm going to let it go into bankruptcy and then go from there. So the longer it goes on, the more concerning it is, because it would be in FTX's best interest to start speaking up if they had good news, because you want to stop the bleeding. And so the fact that they aren't, to me, signals a really concerning trend and where the current state of affairs lie.
Right. I've already written off FTX. I just think that's done. I think if Binance steps in, who knows, maybe a miracle happens. It's not as bad as everyone thinks, but pausing withdrawals, tweeting out that customer funds would be 1-to-1 if the deal goes through. I mean, I just kind of assume that that's already now, that's the risk. That's going to happen. The third thing, which I didn't even bring up and you kind of hinted at, is now Alameda, which is separate from FTX, right? Binance isn't buying that, but it is a ridiculously large fund. It's the size of Three Arrows Capital. It's one of the largest market makers, OTC desks, hedge funds, venture arms in a way. They have their hands in everything in crypto. They have a ton of Solana. They have a lot of different DeFi projects. They have way too much FTT. We've seen what happens a few months ago when Luna and Three Arrows Capital collapses. Like, they have to sell everything. It affects the Bitcoin markets. It affects ETH. That's why we're having now Bitcoin just hit a new bear market low today, right? And so I think that, for me, is the biggest risk as an investor, as a trader, even if you're not on FTX. Like, put that aside. That's now something you got to deal with. But for everyone else, even if you're not touching FTX, if Alameda goes under, like, because they're just shot too, how much carnage does this lead to? Like, do they have to sell everything and they go through a bankruptcy process? Like, it's just, who knows? And I think that's the biggest risk right now for the industry.
Yeah, I completely agree. I think it's correct to like split this out in a way. Although I will say that, this a really telltale sign that Alameda was also in trouble was just the fact that it got to this position in the first place. Like, At the end of the day, like, Sam Bankman Fried still has a controlling interest, I believe, in Alameda. At a minimum, he like has the influence to do things. So if there was a way for Alameda to have prevented this from happening, whether that was, continuing to prop up the price of FTT to fully absorb the sell pressure or do something along those lines, I don't think they would have let it get to that point. That's why, to me, it was really concerning when I saw the tweet from SBF today, because in a way that's almost capitulation, right? You're basically saying, okay, like, if we're letting FTX.com go down, like, if we had the funds to do it, they would. Now, a lot of people have been stating, okay, like, it's in their interest for Alameda to go protect, their core assets, their Bitcoin. They still make a ton of money off market making, off their trading desk and whatnot. But, again, I think after everything that's happened this year, it's not, unrealistic to expect that they might have got, like, in over their skis in terms of the liabilities they were taking out. And so from a contagion perspective, if they do, I mean, look, at the end of the day, they still have a ton of assets. But, if they aren't able to repay things, we saw this in the fallout of with 3AC. It wasn't like, within 24 hours it tanked. It happened over weeks and months, right? Because what happens is, you have time to make it and you have to figure out which debt payments you're going to make, which ones you're not. That then has a rippling effect on the companies who are supposed to be getting those assets. Suddenly they don't have it and they have to make their own decisions. And so that's where the contagion risk is. And I don't think, obviously there was the immediate thing, which is more of a, I think, fear-based selling. But what you don't want to get is when you get to that point of like the forced selling by institutions who might be impacted by the contagion. And no institution in all of crypto has their hands in deep as FTX does, between FTX Ventures, between, Alameda and all their investments across all these layer ones, all these other projects, the Bitcoin they hold, the ETH. It's really ugly, to be honest.
Right. And, as we get more details, we have a fair amount today, but I'm sure every single day it's going to compound. Like, let's say that it does come out that Alameda is now totally insolvent as well. Not just the exchange, but now their trading desk is taking too big of a hit. There's too big of a hole. It's not just them forced selling. It's everyone else that realizes they're forced selling, just learned this lesson 3 or 4 months ago and says, okay, if they have to sell $1 billion of Bitcoin, I'm going to sell my Bitcoin. If they have to, tank Solana's price, why the hell am I holding Solana? Right? Like, that's I think what now comes in the next weeks or months is, what's Alameda? What's their future? Are they going to survive this? I think right now, to be quite honest, I feel for all the people that are stuck in FTX, but for everyone else, Alameda is the biggest risk. Like, do they have to go under and sell everything they own? If they do, I would be looking at those wallets. They own a lot of tokens, and they own a lot of Solana, a lot of FTT, fair amount of Bitcoin and ETH. If they have to sell it, man, we just lived through that. It's so brutal. I guess the bright side is we will get some good prices to buy, but it's it creates a ripple effect.
Yeah, it's really difficult. And I think, the other problem is that there isn't someone here to like bail things out, right? In the aftermath of 3AC with a lot of these companies, FTX and Alameda were the group stepping in, right, to actually issue their own bailout of sorts. And the problem is, like, at their size, I don't know who the player would be to do it. It would have to be a really large financial institution, which is what I heard, some people stating today. They're like, oh, don't worry, like BlackRock or someone will step in. But, I remain like a little bit, skeptical of that, because at this point, the balance sheet hole is probably only continuing to grow. And, I'm not convinced that, in this type of market, you're going to have even a large institution like a BlackRock or something step in, especially given the fact that, crypto in many ways like runs against, the core interests of like the financial and banking sector. So, it also raises the question of like, did Sam know this was coming? And was that why he was trying so hard to cozy up to regulators, or maybe, try to make these regulatory changes that would hurt DeFi, is because he knew this was inevitably coming down the pipeline for them.
Yeah. As it sits right now, for people that want to know what the damage is currently, FTT dropped about 80% yesterday, and it was a massive token. It's multiple $1 billion of value lost right there. That drop, I tweeted at the beginning of the day, it's starting to look more like Luna. Like I gave credit to CZ. I thought at first that was aggressive of him to say. Now I don't think it's that insane to say, right? FTT down about 70 or 80%. You have the rest of the crypto market down anywhere between 10 to 20%. Almost all the major alts down 20%, with the potential for more selling if Alameda goes under. And we still have a couple giant questions. I think the biggest three of them are, why are client funds not one-to-one, right? Like that has to eventually be answered. The second thing is Alameda going to go under? That's the biggest thing for everyone that's not involved with this. How bad is Bitcoin, ETH, Solana, all the majors, every token that Alameda has, are they going to have to sell it? And then the last thing comes down to, what if the CC deal doesn't go through? Like, what if you can't save the day? That's just it's brutal, not only for all the people that had money at FTX, but I think it's going to take us so many steps back. Regulators were already thinking about adding regulations and how to bill in order to try to stamp out some of the things we were doing in DeFi. If something like this happens, a second largest exchange can't pay people their money back, like that's the only thing you have to do as an exchange. When someone gives you their money, you give it back. If they can't do that, man, it is a little bit scary to think about the future here. Like, even if equities and risk assets bounce back, I think this really hurts our chance of having a strong reversal with those until this is all cleared up.
Yeah, I mean, I tend to agree. It's definitely not looking good. I think the other crazy part to think about is that this is playing out in real time behind the scenes. Like, I can almost guarantee Alameda is trying to trade off of this. They very well could have shorted FTT on the way down. I mean, they are at this point in a full desperation mode to try to raise those funds. So they either have to do it through risky trading, through raising capital through a third party, through selling those other assets. So yeah, I think this could get really ugly really quick. And I agree with you on, the concerns with regulatory. And, it's actually like very like fascinating that this like also happened like on the day of, like midterm elections in the US. Like, not because they're like necessarily related, but it's almost just like this more like poetic thing where it's like, this major event is happening, right during like this, like pivotal moment in US politics. And the question is, like, what does this all mean? And I agree. And I think the one thing I would caveat is like, look, I'm someone that deeply believes in like the core ethos of crypto. And frankly, Binance, FTX, a lot of these centralized exchanges, they kind of run counter to it. They aren't true DeFi. True DeFi is transparent. True DeFi calls for self-custody and self-sovereignty over your financial assets. And really what these companies are is they're like a centralized layer on top of it. And what sucks is like, they kind of give crypto a bad rap because that's what the average person thinks of when they hear crypto. They think of FTX, They think of Coinbase because they're the ones putting up posters everywhere and they're the ones advertising. But in reality, like, it wasn't crypto. Like, these exact issues, for all the issues that DeFi does have, and there are plenty right now, this is one that generally doesn't happen. You generally know ahead of time what the situation is of all the actors in the space. And even at this very moment, we don't know like what's going on. Like, we don't know Alameda's financial situation. We don't know FTX's. And that's a really scary thought.
Yeah, to wrap this up, I told you guys I would give you some new info that dropped. The thread that I referenced earlier where people were saying, you brought it up. Did CZ know something? Was this him being opportunistic? Was this him trying to stamp out a competitor, or did he know something was up? There's a thread that dropped. It's not confirmed yet. All this information is going to keep coming out, but I want to give you guys the most up-to-date information we have. There's a thread came out by someone named Lucas Nuzzi, and he looked at on-chain evidence back from about 40 days ago, there was 173 million FTT tokens worth about $4 billion, and it became active on chain. It looks like it was sent from FTX to Alameda. It was right around the time that Three Arrows Capital and everyone blew up. That's something to keep an eye on. Like, did CZ notice that as well? Did Alameda go under back then? And now we're finally feeling the pain of this fund that's basically been a zombie fund. Like, FTX has been running a fractional reserve. Now we're just seeing what happens when a bank run happens. The other piece of new news that dropped today that we get to cover is Sam wrote an investor letter, and this leaked. I think some people were trying to sell access to it, but it leaked. And he said, look, I'm sorry I've been hard to contact for the last few days. I wish I could have been more communicative during this process. Unfortunately, I wasn't able to. Things were coming together dynamically. He said, we've entered the non-binding agreement with Binance to buy FTX. He said, we're optimistic we accomplished that, but he said, I don't know. Like, unfortunately, I don't know what's going to happen. And that's just what we're all left with, Alex. There's too many questions of what the hell was going on behind FTX? How long did they know this? And also, like, how dirty is this? Like, how deep is the swamp, man? It gives crypto such a black eye. If it's as bad as some of the details we're seeing right now, I think it really hurts our chances of having a reversal, even if stocks start going up, right? Even if macro clears up all the things that have hurt us. This is so tough. Like, yes, we'll recover eventually, but it is very hard to bounce back when now new regulations could come in. Now one of the largest funds has to liquidate, right? Those are now the biggest risks. Is there anything new that you saw develop late in the day? You were hosting a Twitter space with thousands of people. What new info did you see?
Yeah, I mean, I did this new thread, and I think we've covered, like, most of those. A lot of it comes down to the open questions, but I saw an interesting tweet. One that just came out from Frank Chaparro at The Block is he basically listed out, here's FTX's core investors, BlackRock, Sequoia, Paradigm, SoftBank. A lot of these names you can recognize, Multicoin, but what's like kind of scary is, like Ontario, their pension fund is on that list. So it's like, okay, now you had people whose retirement accounts were directly tied to it. And, these companies are worth keeping an eye on because it's like, A, they are likely to be impacted if FTX goes under to some degree. And this is where we get into like contagion. Or B, if someone was going to step in, maybe it is someone like this from this list from BlackRock. But yeah, right now it's not looking good at all. And to your point, yeah, this could get really ugly really quick. You don't want to, like, it's hard. We have to see the info that comes out. And I think everything, will continue to develop over time. I don't think we'll unfortunately get answers fast. Like some of these earlier issues in the year to this day are still, getting unwound and new info is coming out on it. But right now it's not looking good. And there's things here that there's questionable things here that might've been criminal, to be honest with you. Like this is not, I think like a lighthearted matter at all for the industry or like anyone involved, which is like just really sad to see.
100%. I think if you're listening to this and you're wondering when's the good news, when's the good part going to come out? The good news, the best case scenario we could see is if Binance goes through with this deal, if CZ goes through with this, buys FTX, that at least gives you some hope that it's not a total shit show and they are now going to make everyone whole that deposited to FTX. I think that also gives you a sign of hope that maybe Alameda, one of the largest funds, also isn't just in a giant hole and they have to liquidate. So you want to see Binance go through the deal. The second thing that you would like to see happen is if this gets cleared up, the regulations or potential regulations don't get any worse. Because as you see, it's just set the stage where it's gotten worse, very bad in the past 24, 48 hours. It can get a lot worse. I'm not trying to be a doomer here and say everything has to crash further. But like if we don't go down the good path of this wasn't totally criminal, it wasn't a total Ponzi fractional reserve system, regulators are going to clamp down, forced selling is going to happen, and it really hurts our chances for Q4 and Q1 of next year being good. So we hope basically that CZ saves the day. That's like that's what everyone has to bank on now.
Yeah, it's a really tough bet to make though, because you're basically betting on someone who's a competitor, and his behaviors so far have been very on the offensive. So I think it's hard to make that. I think what this is a reminder of is why, there's always the people in crypto, right, that are always shouting from the rooftops of, we need true decentralized finance and transparency, not your keys, not your coin. And I think it's easy to like laugh at those people, especially some of the, new joiners to the space. It's hard to remember why this matters, but these were the people that lost serious amounts of money in Mt. Gox. These were the people who have been burned many times. And, it seems like we unfortunately have to go through these painful cycles, time and time again. And I guess, the optimistic case is, these really large centralized exchanges were starting to push the industry towards a direction that I believe goes against the core tenets of crypto. And so I guess the positive spin on this would be, if FTX isn't around to push it that direction, maybe this gives an opportunity for more decentralized alternatives to continue to thrive. But again, it's going to be very, very tricky in the coming quarters, depending on what happens here.
100%. And in the worst case scenario, at least you'll get some better prices to buy. That's really all I have on the good side. Alex, I appreciate you coming on the show, walking through this. I've loved your writing and your ability to cover this in an objective way. When you first wrote the thread 2 days ago, you were getting praised because you weren't dogging CZ, you weren't going after Sam, and I kind of recognized it too. I was like, guys, I know this looks scary, but we shouldn't push for CZ to attack him any further. I think you covered it very well. For people that do want to keep up with your research, your threads have been on point. I think it's the best resource for people to keep up with this. Where can they go? Share your stuff.
Yeah, definitely. I appreciate the kind words there. So yeah, I basically am in the process of launching a Web3 media outlet. You can go to www.web3pills.com. So right now it's a daily newsletter Monday through Friday. And then I've also been publishing 1 to 2 in-depth blockchain reports. And just to kind of give a little bit about my background and how that plays into it is, I've spent a lot of my career working both in big tech at companies like LinkedIn and Intuit, but also building on blockchains like Ethereum as well as DeSo. And what I noticed, especially over the past, 1 to 2 years, is that I wasn't necessarily always happy with the coverage I saw in crypto. And I think because of that, or I think a part of the reason I felt this way is that it's very difficult to cover some of these topics if you haven't worked really closely with some of these blockchains or been really familiar with it. And I think, you see some of these outlets really struggle to grasp some of the more technical details. And so I really wanted to put out informed and objective content. And the second thing I really want to push for is I'm very much against like blockchain maximalism. So that's part of the brand. And why I chose it Web3 Pills is that, I didn't want to be an Ethereum maxi. I didn't want to be a Cardano maxi or Bitcoin maxi or Solana maxi. I want to give every blockchain community a fair opportunity, because moments like these make us realize that we really do have to stick together, especially in moments like these, because the only way that we can all raise all ships is if we're all working together towards the future. We already have many of the things you've mentioned on the horizon that are going to push back against us. So we really need to be working together to make this an industry and a space that people want to join. So that's pretty much what I'm trying to accomplish with Web3 Pills. Doing a lot of research, putting out a lot of content, and appreciate the fact that people are learning, and anything I can do to help advance the space through that channel, I will.
I can respect that. For people listening on iTunes and Spotify, his link is right down below. You can follow him on Twitter. Also check out Web3 Pills. And if you're watching on YouTube, appreciate you guys tuning in. As this story develops, I'm going to give you as much of it as I can get, right? If new developments come out and CZ buys it, great. We have good news. I mean, prices could still dip, but I think it at least keeps the chances alive that we can reverse off this. If this deal starts to go south, the only thing I think you can hope for is better prices. But I'm going to keep you guys in the loop. Appreciate you guys watching. Alex, I think that's all we got, man. It's going to be an interesting rest of the week. We'll see how this develops. Appreciate you, man.
Yes, indeed. Thanks, Luke. Appreciate it.